Safir Anand to talk about what he feels about the new SEBI circular. On Friday, the situation was different. Sunday evening, when the indication, it's not a final verdict from SEBI, when the indication came on the consideration towards compulsions of the market participants, the mood in the market surely towards mid and small cap stocks is not that euphoric. Safir, good morning. Fantastic to connect with you. Safir, sometimes you need a trigger, sometimes you need a event, sometimes you need disruption. Do you think now, given that SEBI has recognized the importance of revisiting small and mid-cap stocks, there is going to be a recognition and re-rating for a lot of mid and small cap stocks now, because it may not be 30,000-40,000 crore outflows, but surely some flow will migrate back from large cap stocks and mid-cap stocks to small cap stocks.
Yeah, hi, good morning, and thank you for having me over. I actually feel that the clarification that SEBI gave is even more positive than the original announcement. And I will start off by looking at it from a perspective of the negatives that people had on the circular. So the first negative that many people expressed their opinion on was that large caps will see a lot of outflow. And with this sort of clarification, it is quite eminent that large cap outflow is not going to happen. And obviously, the large caps are not reacting in a negative way because of the clarification. The second part of it is that many people felt that it was wrong on the part of a regulator to tell a fund manager what the allocation ratio should be. And I think SEBI has done a fair job in terms of clarifying that A, they've given them a lot of time, B, they've given them several options. And to that extent, while protecting the nomenclature or the misnaming of the fund, at the same time have given them several options. So in that sense, it is no longer a strict sort of a dictate by SEBI to say what percentage or what stocks you should own. The third part of it is that SEBI has said that we will examine the setting up of a flexi fund. And to that extent, a new category will be created. And usually when a new category is created, it is not only created for existing players, it will also invite a lot of new other players because people want to raise money and they have to go to clients with some sort of propositions. So a completely new segment will be created. The fourth part is that even when they talk about switching, so some funds say that we will switch from our existing multi-cap into large cap and large and medium cap. Even to that extent, the question is that their survival is dependent upon their returns. And if the 30,000 crore doesn't happen, at least 10,000 crores or some amount, I'm just giving a random figure, some amount has to definitely come into at least the mid caps to begin with. And lastly, the segment of small caps, if it is vacated by some of the large players, will get an opportunity for some of the other smaller players or re-entry by the large players with smaller funds, because public will give you money where the returns are. And the reaction to that has always been that when small caps perform, money does come in. And this is what we have seen in the last few months. So for me, this has actually become a better situation than a knee-jerk reaction of deciding which segment of the market to be in.
Safir, the challenge for small and mid caps is that the economy has changed. The shape of the economy has changed. The face of the economy has changed, the efficiency of the economy has changed, which is that post GST and post COVID, there is a market share shift towards big companies. There is efficiency which has shifted towards big companies. So the sheer importance of small and mid cap companies and the relevance of that in the economy has reduced and it is getting marginalized. So some would argue that it may look like a very narrow market, but that is the way if economy is, and if that is the way economy is, small and mid cap stocks, barring you may get a jackpot if you buy the good business and the good stock, it's going to be in difficult terrain to invest. Unlike what we saw in the previous time when the rally started, every small cap went up 2-3 times.
Correct. So, we can't be looking at small caps as a whole basket and say that everything in small caps or everything in mid caps has to rally. Because while this classification may have a sentimental boost to whatever extent, the reality of the economy, the reality of the liquidity that some of these stocks come with, the reality of the business model and whether it's getting disrupted or it is, for example, losing out to a sort of a new migration that is happening is also to be seen. But, I'm also mindful of a few things. First point is that, for example, in law, we are told that in order to look at a statute, you must look at the intent behind it. So I would be very interested in thinking that when SEBI has made a categorical statement that there is over-concentration of the market in a few large caps, it is definitely within their mind to see a much more broader rally. So from an administrative or regulator perspective, they're probably doing the right thing. The second is that the government of India has a huge impetus towards small and medium companies. And today, a lot of incentives, for example, a lot of people say that, things are not being done across, but we see that the government statements do indicate that a lot of money or benefits are being targeted towards the smaller sectors and the medium companies. For example, they have exemptions in some cases, they have some tax benefits, etc. So I feel it is all going to be a part of a move. The third part is that the regulator is also talking about automatic listings. They are also allowing Indian companies to list overseas. I mean, even that regulation has come in. So the nature of the market is that sometimes capital empowers you to come out with the problem that you are in, to look towards a new business model, to goes very well with the India Mart story. And if the small sector eventually gets, whether it gets incentives, whether it gets some sort of a SOP or whatever, by whatever method, or it gets some qualifications, if that does well, then there's more reason for people to subscribe to India Mart as part of the service. So I'm not going to change my allocation or anything just because of this reclassification. Of course, for example, if the stock falls and I find it lucrative, I may add to that position. And anyways, my allocation to the stock is going up just by the stock price movement. So as a percentage of my portfolio, the allocation is anyways moving. So I'm not going to change that and other favorites, in the sector. In fact, I may add to wherever I find there's an opportunity. For example, on the API space, I still feel there's an opportunity. If promoters of some of these API companies are coming on Friday and making disclosures or buying shares, and I don't see a reason why I should trust that promoter at this stage.
Sure. The other theme, Safir, and the last time we were chatting with you on this show, you said that there will be a boon of tech-based companies and it will not be restricted to just what an India Mart or a Reliance is doing. While they're well-discovered stories, do you think there could be some within the listed universe, in the healthcare space, for instance, which have the potential to become from small caps to mid caps and then further on?
Well, if you read on Silicon Valley, one of the hottest subjects of investment is medtech, where medicine will meet with technology for the purpose of doing something depending upon what it is, whether it is mapping, whether it is dispensing of things and all that. And right now in India, opportunities in medtech are immense, but many of them are not known, as in the companies are either privately listed or have not been discovered on the market. I may also myself not be aware of some of the names, and the process of research is on. Similarly, when we look at some of the small scale companies, etc., what basically ails them? That they have done homegrown businesses based upon their allocation of capital and their understanding of what they could do, but they have not got that tremendous boost that technology can give them. The moment they catapult from, say, 100, 200, 300 crore rupee turnover to a digital platform, the numbers change in an exponential way, because even if they haven't grown commensurate to, for example, a large cap or a significantly well-researched large mid-cap, that 300 to 500 crores is a lot of return for an investor. Similarly, 500 to 1,000 crore is a lot of research. I think in one of the wealth studies, even Mr. Ramdev Agarwal had indicated that once a company reaches a certain threshold limit in terms of market cap, the returns actually become exponential after that if the company continues to do well. And that's why he indicated, I think, in a research maybe 2 years back, where the maximum amount of wealth is found. So things of this sort. And then I'd read once a very fascinating book that spoke about something called as the edge strategy, which is that the highest amount of wealth lies in creating a business and then going on the edge. For example, Apple created a phone and then derived a lot of revenue from edge services such as music downloads, such as apps, such as all the value added, even accessories that they give. So all these are akin, in my assessment, when I look at the stock, technologies that edge service that this will collaborate in order to lure these businesses higher.
Okay, fair enough. Safir, we've covered a lot of ground. Would you like to leave us with some of the, top few names perhaps that continue to be on your preferred list at this time?
Well, I would continue to look at this situation vis-a-vis what is happening with the circular, but more importance on what is happening with the economy and where it is leading. And to me, the 5 sectors that really stand out are technology, pharmaceuticals, agrochemicals, which is including chemicals, then the rural themes, which includes, because look at the kind of numbers that are going in the hand of rural India and what rural India is likely to do. In fact, if you see the newspaper, the Economic Times coverage only a day before yesterday, it talks about an acreage and the yield on crops which is going to be probably unprecedented. So when you look at a situation like this, I would rather bank on some of these companies and also the impetus of the government towards them. So essentially these areas, and in a very limited way, perhaps some pockets of consumption, but not overdoing consumption, because it is a very well researched and very accomplished thing. And some parts of private banking, because again, private banking cannot survive without technology. So where the bank has got great technology, the ability of the bank to do many other things is going to be very inept. Similarly, for example, when startups come, a lot of fintech startups come, what are they going to do in terms of their product? They still have to sell more insurances, sell more services, etc., for which they have to go to some more established players. So I won't do much of tinkering beyond these 5 or 6 odd sectors.
All right, great, Safir. Thanks so much for joining us and taking us through all of your views this morning. Good to have you with us as always.
Thank you for having me over.